Hi, I'm Steve Clapham. In this video, I'm going to be taking a look at funds. Normally we only look at stocks and talk occasionally about markets, but we've been working very hard on Greensill, and there's a few learnings that we've come up with, things to watch out for the next time you're thinking of investing in a fund. Let me take you through it. So this is the Greensill slogan, making finance fairer. And what Greensill was doing, and I think it's important just to go through this, is it operated supply chain finance. And basically what that means is that companies allow their suppliers to go to Greensill to get early payment. This is really helpful for the suppliers because it helps them flatter their working capital and their cash position. So it's a tool for companies both to improve their capital efficiency, but also to make their balance sheet look better than it is. And this is one of the funds that Credit Suisse offered until very recently. You can see that it says for professional investors only. You can see that it has quite a significant amount of assets, $6.8 billion. It's been around for a little while, since the middle of 2017. And you can see the annual management charge is 70 bips. That's quite high when you consider this is a low risk fund, which is offering investors 1.5% over LIBOR. So it's obviously the end customer is paying quite a lot. And you can see that it looks like it's had a jolly good performance. It says the fund seeks to generate stable and uncorrelated returns by investing in notes with a maturity typically less than a year, backed by buyer-confirmed receivables, payment undertakings, and so on. The underlying credit risk of the notes insured by highly rated insurance companies. The fund aims for a target return of 1.5% above 3-month LIBOR. So when you read this, it's Credit Suisse, right? It all sounds great, doesn't it? And then you carry on and you look at the spread. Spread looks fantastic. 22% of the funds invested in sovereign bills. What could be safer than that? Well, don't answer that, because there's quite a lot of things that could be safer than certain sovereign bills, but there's a great spread of exposures. I mean, there's quite a lot in basic resources, but there's a good spread here in sectors. The spread in countries not quite as good, because you've got 50% in the US, but probably 20% sovereigns or T-bills, 13% in the UK. But it's not a bad spread. And look at this, look at the number of positions, 800 positions. I mean, that means that there's no one single obligation that's going to cause the fund any problems. And there's 242 different obligors. So those are 242 different companies, different relationships. And in the marketing documents, Credit Suisse point to these 3 senior portfolio managers who are looking after your capital. And note that they make the point that 2 of them are CFA charter holders and one's a certified European financial analyst. What would be interesting to see is if the CFA Society actually does anything about these CFA charter holders, because it doesn't sound like this fund is going to end well. And one has to ask oneself, well, if I'm relying on these people as being qualified, are they going to carry on being qualified? I'm a chartered accountant. If I do something bad, if I commit a fraud, the institute will throw me out. I don't know. I genuinely don't know what happens if you're a CFA and you do something wrong. But let's look at the critical piece of information. Here is the top 10 counterparties. And you can see that it's 27% of the asset base. So it's a big chunk of the asset base. Obviously, when you've got that many different positions and 240 different counterparties, You wouldn't expect the top 10 to be any more than this. So let's just go through these. Mediterranean Shipping Company is one of the biggest shipping companies in the world. It's a privately held company, and 4% of the assets of the fund is $320 million. That doesn't sound like, I mean, it sounds like a lot of money, but it's not an unreasonable amount of money for the size of this fund. But then it starts to get interesting. One of the biggest investors in the fund in the past, and one of the investors in Greensill, is Japanese company SoftBank, who also have the Vision Fund, big venture capital fund. And the Vision Fund backs a lot of startups. And SoftBank and the Vision Fund have backed both View Inc., which is a US glass company, and Oyo Hospitality UK Limited. Oyo Hospitality UK Limited really hasn't traded, although it's raised £350 million of share capital in the last 12 months. Oyo is an Indian company, so what the UK business actually does is a matter of some doubt to me. I don't know what it does. I don't know why they've got a UK business, and I don't know why it would have this level. I mean, it's a $200 million, and coincidentally, exactly $200 million obligation to this fund. Seems slightly strange that a hotel company would have that. But those two, View Inc. and Oyo, are directly related to SoftBank. I'll come back to BCC Benguera in a minute. Shop Direct Holdings, that's a big position. It's $193 million, but it's part of Very. Very is the former Littlewoods business in the UK. They have something like £2 billion of customer debt. Littlewoods used to have a catalogue. Very now sells online, and it's got a lot of credit customers. So that of itself, I'm quite comfortable about. I mean, I've no idea how good a risk Very is, but it's not something that I would think was particularly odd. And then down here we've got Deutsche Börse, 1.39%, which is about $95 million. Now, interestingly, Deutsche Börse only has $400 million of trade receivables, and it's bizarre that it would be in this list. It's bizarre at that amount, and it's bizarre that it's in this list. But the Wall Street Journal broke a story suggesting that this obligation was actually to a joint venture between Deutsche Börse and General Atlantic. And General Atlantic is one of the investors in Greensill. So again, there's a connection back to a Greensill shareholder, or potentially so. It looks slightly odd and makes me feel slightly uncomfortable. And then you look at these other companies, Tradeshift Holdings, Guazi Limited. Guazi is actually a Chinese company, Prime Veer Limited. I couldn't find these businesses on the internet. I mean, Tradeshift Holdings seems to be some sort of e-commerce platform. But, you know, these companies have got between them over $400 million of credit from this fund. And they're unusual companies. And it's unusual that they would be here. And lastly, we've got BCC Benguera and BCC Ferrymead. What these are, I have no idea. I don't know what BCC Benguera is. I don't know what BCC Ferrymead is. BCC Benguera has got a 262 million credit from the fund. And with Ferrymead, that's nearly $350 million. Benguera and Ferrymead are sugar mills in the Bundaberg region of Australia. That's where Lex Greensill, the founder of Greensill, that's where he's from. So my speculation is that these are two vehicles that are connected in some way to Lex Greensill. So what I've done here is I've gone through the top 10 holdings of this fund, and I've said lots of them look surprising, and some of them actually look odd. Now, if you're going to make an investment and entrust your capital to somebody else who's a professional running a fund, it doesn't mean that you should give up all responsibility. You need to do some due diligence to make sure that these people are going to be responsible stewards of your capital. And when you look at the top 10 list of holdings, if you feel uncomfortable, you shouldn't invest. And this is a fund for professional investors. It took me maybe 2 minutes to go through that list of 10 companies and say, there's something very odd and very suspicious here. Why? I don't know. I don't know who is invested in this fund. Certainly, I wouldn't have touched that fund. Even if I hadn't been aware of the Greensill connection, I would have been very suspicious about it. So next time you're looking at a fund, make sure you check the top 10 holdings and make sure they look sensible and they look like you're going to get your money back, because that is the most important rule in investing. Don't lose money. Thanks for watching.